welcome to Cambridge House Live. I'm Vanessa Collette here at the Canadian Investor Conference, Toronto. I'm joined by Stuart Browne, the founder and CEO of Pycap Ventures. Welcome, Stuart. Great to have you here.
Great, thank you.
Now, Stuart, let's start out just by talking about crowdfunding. What's the status of crowdfunding in Canada?
Okay, well, currently in Canada, the equity crowdfunding regulatory body is currently under review among the OSC and other regulatory organizations.
Okay.
However, there is a crowdfunding platform called CDUPS.ca, which is located in Alberta.
How do you spell that?
CDUPS, Seed, S-E-E-D.
Oh, Seed.
UPS.ca.
CDUPS.
Right. And we're actually putting a portion of our capital raised for our venture capital fund on that platform.
So you're raising $10 million.
That's right.
For your fund.
That's
at
right.
The moment.
And we've allocated $300,000 for retail and accredited investors to invest through this equity crowdfunding platform on CDUPS. And they're using something called an offering memorandum exemption as opposed to a crowdfunding exemption. Anyways,
so
this is regulatory. Kind of a loophole, but we don't have to go into the intricacies of the regulatory system regarding that. But anyways, yes, there is crowdfunding in Canada. In the States, however, there is crowdfunding as well, but only accredited investors can invest through a crowdfunding platform.
So in Canada, I think I saw something, was there a maximum of $10,000 per person? Is that what they've approved so far?
For retail investors, there's a maximum of $2,000 per person. For accredited investors, it's unlimited.
Okay.
And also note that for whatever reason, only investors outside of Ontario can invest in crowdfunding if they're a retail investor. If they're an accredited investor, they are able to invest within Ontario.
So that could change with time, but it's just the status of it right now.
That's right.
So tell me about your fund. What are you planning on focusing on?
Okay, well, our fund is unique. We're actually the only financial vehicle of its kind in Canada. For the first time ever, we are creating a venture capital fund geared towards accredited and retail investors. And the huge advantage for our investor base is basically we're the only option for them to access the startup tech world in a structured, diversified, pooled investment format, which is critical because even though startup tech has the highest return potential, it's also the most risky. So
how are you different, for example, from 500 startups?
500 startups is actually an accelerator.
Okay.
So it's like an incubator, however you want to call it. They basically house a bunch of companies. They take a percentage of their equity and then they help them grow. But it's not open
the public
to
can access
exactly.
It.
That's
but with
right.
your fund, they'll be able to access this pool, and you're going to have a target of 30 companies.
That 30 to 40 companies,
30 to 40.
That's right. So if you're a retail investor, you go onto CDUPS.ca, you can invest in our fund. Let's say you want to invest $2,000 into our fund. That $2,000 is going to be put into our $10 million pot, and then that $10 million is going to be spread out over 30 to 40 companies. And one huge advantage, in addition to diversification, that we give our investors is that all of our investments are going to be co-investments with the big major VCs in Canada and beyond. So for investors to try to get access to those deals on their own would be completely impossible. Yes, they can join an angel group or go onto a crowdfunding platform and then try to do it on their own. But to be quite honest, the companies that end up trying to raise capital through those methods are ones that have already been rejected by the VC. So we could get them in on the exclusive deals of the VC community.
So what sets you apart is that you have the lowest minimum entry point for investors to access.
That's right, because to be honest, our structure is very plain vanilla in terms of other venture capital funds, i.e. Omer's Ventures or Andreessen Horowitz. The thing that really makes us different, as I mentioned, is just our minimums are low. So instead of going after institutional investors and saying you have to put in $2 million into our fund and you have to be a part of our old boys network to get in, we're totally flipping that around and just opening it up,
Right.
being kind of like the mutual fund of the startup tech world, if
So
you will.
what area are you going to focus in on? Are you looking at Internet of Things, enterprise, wearables, apps?
To be honest, all of the above.
Okay.
We're more stage focused than we are sector
Stage
focused, meaning we invest in early stage startups. We have a preference for software just because of the return potential. And one major reason why we are stage focused is because statistically 2/3 of all tech acquisitions happens at or before the Series A round. And that's where you get the
Right.
huge gains. For example, there was a company that just got bought out yesterday by Hootsuite, right? $60 million.
Marcus Daniels was on our show talking about it through
perfect.
Highline.
Right. And another great example is Oculus Rift.
Yes.
Bought out by Facebook for $2 billion, as you know, I'm sure.
They were at the Cantech show.
That's right. And so that company was bought out by Facebook before it even finished their first product. So it sets us apart from, let's say, a publicly traded fund that has requirements that a company is at a later stage and generating revenue.
Right.
They're missing out on 2/3 of the big gains that can be achieved through strategic acquisitions by Google, Facebook, etc.
So are you looking to fill the gap of where there's this missing risk capital for early stage companies?
Yes, definitely. But our main vision and our main mandate is to bridge the gap between the venture capital, startup tech world, and the financial services world. We're actually the first financial vehicle aiming to really make that happen.
And how are you planning to do that?
Well, as I mentioned, through this equity crowdfunding platform, we could get retail investors investing directly into our fund. We're also currently in communication with an investment bank that has their own database of accredited investors as well as institutional investors. And also reaching out to investment advisors who want to add our product to their product line.
Excellent. Well, Stuart, it sounds very interesting. We'll certainly be watching with interest. Thank you so much for being here today.
Great, thank you.